Good morning, everybody. How you guys doing? A normal one from here would take us to where the SPX was trading at 4 years ago. Hmm. That is a take. Um. Yeah. Let's see. Bottom of the COVID crash would be like 60%. I think that would be kind of ridiculous from like a PE standpoint. How's everyone doing, by the way? I think somewhere around like 30, 34 to like 42 would be far more reasonable. But that comes with a caveat that like any crash can end up being that bad, right? Because I mean once the market starts doing that, there's it really just I mean no one really knows where it's gonna stop, right? Like the COVID crash wasn't even very big. It was like 35%. If you look at like the .com bubble, right? From like peak to trough, that took a lot longer. It was like 50%. 2008 was about 60. It would be better if this market wasn't at an all-time high. Yeah, probably. Fun stuff. Bullish. Can we keep the same format as last week? Trading, then memes, mags, and macro. Yeah, we can talk about some trading stuff if you guys want. Family pool party today, so I'll catch up later. I can't wait to hear more about JFresh's crash. Have you seen the macro data for that yet? That was that was fucking like the options macro stuff. That was fucking crazy. Leverage went from like 0 to 100 in like 2 days. I think this is the best 2 week returns on the S&P um, since like 1928, which is kind of fucking nuts. Why are you showing such a large drawdown? It's too early to be this horny. Oh, someone was asking, like, talking about how big of a crash would be needed to move back to some prior historic valuation. Right now, the Schiller PE ratio is 36.25. Earnings yield is 3.46. And we're pretty close to the top of 2021. I think we hit like 38 back then. Except the difference is that the earnings yield at the top of 2021 was like above, I think it was above 4%. That was like 4.2%. I'm finally set up with a big screen and a headset at home. This is so much better than my work laptop. Still a poor, but I feel I've arrived. Sounds like you have. That's awesome, Jen John. Now you can lose money on a prettier screen, and that changes everything. Can you hear the colors meaning and the MM expected move? Oh, so the green is the upside expected move. The red is the downside expected move. Those are always going to be equivalent, right? Like 60 bips, 70 bips, whatever. And then the orange is like the move that is most likely given the positioning on the chain from the prior night. So it's like weighted to where all of the IV is. Will this thing ever break? Like the fuck? I mean, I don't know. There's a lot of money getting plowed into equities. Nobody wants to miss out, right? We're getting close to Gamma Max. Give me a second. Yeah, Gamma Max on SPXW is at like 55.99. SPX or like 57.47, but Vega neutrals at 56.06. I'm not entirely sure that's correct. Oh yeah, because there was the day that we didn't get any fucking bid ask data. Although that's weird. Maybe that's not right still. Let me check something else. Hmm. Yeah, we got almost $1.4 trillion worth of delta added to the chain in the last 2 days. But not a lot of move in gamma. Let me see something on SPXW. SPXW also picked up like a trillion, like another trillion in delta. I can't. It's still hard to tell if like the repositioning is so heavy that it's fucking up our IV prints, or if like the opera data is just wrong for the last couple of days. But if it's been wrong for the last couple of days, it's been consistently fucked up, which is very strange. Early last week, I asked if you could possibly go over how you changed the IWM play when it hit the risk line. Um, no, that doesn't look right. Did IWM hit my risk? Oh yeah, briefly. What did I do for that? Hold on, I know I did something. I'll have to look. Give me a second. I gotta open my other brokerage. Give me a minute. Oh, 2FA. Okay. The All right, looks like the original position was a bear ladder. So it looks like I cashed out the 200 put. And I rolled out the 190.95. Okay. So I think I could maybe I could just show you on option strat. That might be easiest. Give me a second. So we could talk about this a little bit. I am still short IWM, although I'm not sure it's ever going to break under 200. All right, so let's go here. Sorry, I don't have this like ready to go, so it's take a minute. Okay. All right, so Looks like I had the 201, the 200, 195, 190. Oh, it looks like I closed some of the 195s too. Okay. And these were July 19. Okay. So yeah, it looks like I got stopped out of these two. Well, half of these. So hold on, let me link these. So I had 25 of these. So it looks like I got stopped out about half of these. 15 left, well, almost half. Oh, no. Hold on. I have to unlink these. Sell to close. 15. It's like closing price. Where the fuck is that? Is that going to be in the trade log? Oh, Jesus. Okay, I'm not gonna go dig up all the prices. Okay, so it looks like I sold to close about half of these. And these got stopped out entirely. Which left me with the 25 sold 201s and the 190s. These got rolled forward to the August 16 expiry. Then I sold the 205. And bought the 200. But I bought the 200 for the August 16 expiry. So I still have... Yeah, I still have 15 of the 195. I'm not entirely sure why. But I'm probably going to close those out. So now the position looks something like this. Am I missing? Oh, because it's not showing the additional expiration, right? Everything's expiring on the 19th. So past the 19th, it looks like that. But into the 19th, I still have the sold puts to the upside. So the downside's hedged here. It's just you can't see it because of the way option strat handles like expirations. They only show you the expiration in front. So they're like it's only showing the curve for the 719 expiries, but it is hedged. Like on the downside, it gets more profitable than it loses. Because if you remove these, if you remove those 19 expiries, right, then you can see that's what the downside looks like. I don't think it would be that involved, but I very much appreciate your explanation. Yeah, I don't think it was intended to be that involved. I mean, basically, I just cut the profitable puts when they printed, which was like the next day, right? When we first slipped below below, like back below 200. It looks like they just got stopped out on the turnaround. And then when we went above 201, that's when I sold the 205s and added back in. So really, I got stopped out of a chunk of the position, sold some more of the position, or sold some new positions, and basically entered a new ladder for August. And then like the 190s were just dead, so they got rolled out. Sold the 205p. Yeah. 205 put. But those are sold on the 19th, not August. The August expiration change was the long puts to the downside. Is JFresh gonna be spicy today? I have no idea. Almost forgot. I just got approved for level 2 options for on Fidelity. You know what that means? Margin, baby. Let's fucking go. Oh boy. Is it hard to get approved for level 2 on Fidelity? I feel like you just put money in the account and they give it to you. Are compounding data issues bullish? I'm not sure. We're doing so many changes to like our database and everything that I want to say that the issues are just a bug, right? That we're trying to iron out. But like the more things we iron out, the problems still remain. So um that leads me to think that it's not on the database side, right? And it's just SIBO. And everybody else is like when you look at a lot of other websites, it's hard to tell because they smooth everything, right? So all the like outliers are getting interpolated, um, and then that kind of makes you wonder if the data is just shit, and if the data is shit, like that's an awfully long standing persistent problem for something that is supposed to be reported every day accurately. And it could be, right? I mean, it would just imply that there's an obscene amount of out of the money positioning that's fucking up the IV and the bid asks. Gurk win EPAM Moon. Well, I was kind of hoping it would by now, honestly. Why is this not? Hold on. it's it's kind of held the trend, but it's not. Yeah, it's really not getting better. Why is that? Hold on, this is a log. There we go. Yeah, I mean it's not got a lot of time to break out. It's already the 8th tomorrow. I'm wondering if it'll make it. It needs to break this like 188 190 level, right? And the last high was higher, right? We have a lower low, but we still haven't pushed up into that like 92 range. And every time we test it at 190, we're getting rejected hard as fuck. I mean, each one's a little weaker, but they're still really rough rejections. So there's either a lot of shorts coming in at 190 or people are willing to bail at 190, which is possible, right? Because it dipped to like 170 already. So probably more than enough people that are perfectly happy with like a $20 profit and they don't have to, risk waiting out earnings. I think if nothing happens this week, I'll probably roll forward. But if I do roll forward, I'm gonna grab like a bunch more theta. I still have shares, so maybe I won't even do that. I'll just sit on my shares or average them up a little bit. Fidelity gives margin if you have a pulse, just like Robinhood. Yeah. The market just feels like the first half of reminiscences of a stock operator at this point, genuinely. I mean, it's definitely just unpinned, right? Like it's kind of just going, doing what it wants. Rolled out some Hal leaps. It's refreshing to trade something that doesn't just drop. Yeah, Halliburton's been lagging a bit given the improvements recently in oil prices, but I think holding this range is pretty good if it can, right? It's still pretty well above trend. I think this goes back more. Yeah, I'd probably go out on the daily. So that doesn't look too bad. I'd be pretty willing to keep adding to leaps unless it breaks under 32. But I think this should be fairly solid support. Roll down and out some Hal leaps. It's refreshing to trade something that doesn't just drop. JFresh is gonna drown in what? Alright, so did anybody actually have any trading questions? Because I got one, I guess. How do I make money on my Fubo shares when CCs are like 0.01? Sell CSPs? I'm not going to teach you how to manage a condor. It's complex. Also, frankly, you probably don't have the capital to do it anyway. It applies to like such a small amount of people. What do you think about GBX earnings tomorrow? Chain looks one sided. It's a freight company. I don't play earnings. I mean, I could just start there. I probably don't have options data for. Yeah, I don't. Yeah. I don't set up straddles for the weekly. I set them up for overnight. And I usually go uh, right around 3 DTE. When the market's trending, I'll shave theta off of the upside position and add theta to the downside position. So, um, like the last 3 days, I've just been buying like 1 DTE calls. but I'm buying puts like out. I've been buying puts out on the OPEX expiration, so I just keep adding puts there. I did that. That's how I got the shares. Oh, okay. Interesting. Couldn't roll them out? What were you selling at? How about income straps given the market pump? Stick to credit spreads of Mag 7 instead of 30% loss risk. I mean, that's fine. Although I think major moves in Mag 7 are probably going to happen overnight, but as long as the remains supportive on those chains, then yeah, credit spreads are nice right now, right? They're credit spreads are always awesome in a trending market. So I don't think that's necessarily a bad approach. 30% loss is a lot, but if that I guess that depends on how much theta you're selling on them. I generally don't sell credit spreads that far out. Not on the Mag 7 at least. Usually they're like weeklies or 14 days. Actually, how do you choose the material for your condors? I go to Joann's Fabrics. I like a nice paisley. The margin requirement to do that is insane. I mean, really, I'm selling short strangles, and then as they get hedged over time, they partially become more like a condor. Schlumberger looking good. Eh, it's struggling a bit with like gamma delta neutral. I'm up on my leaps from the low, but yeah, it's just been chopping quite a bit, like between the like 40, 47, 48, like upper test, and seems like it's got some support at 46. Um I wouldn't say it looks super bullish, but it doesn't look very bearish either. Friday it fell back below DNGN, but I mean oil's been swinging all over the place over this last week. Yeah, it'll be up like 2% intraday and then it drops like like 150 bips into close. Those those like CTAs on oil are still a bit net short, so they haven't gotten squeezed out entirely yet. I think they started to the other day. We kind of hit like 84 a barrel, and then oil snapped back again, back to like towards 83, or oil futures. The problem with HE isn't, I think, that they're at risk of bankruptcy. Like they still make plenty of money. I think the risk is if any liability is exposed in the lawsuit process for the wildfires, they are probably going to end up destroying shareholder equity and breaking the company apart. Right. That's what PG&E did when they got sued. And I think the assumption is that they're going to follow that same path. Managing a swing trade versus cutting the position and waiting to re-enter. I mean that's going to be based on your expectations and targets, right? I mean, anytime you're swing trading something, you should probably have some defined risk baked into your entry. And if you break that defined risk during the period of your trade, you should get out, right? Now, if you want to use a moving average for that, that can be fine. If you want to use historic support, you can do that. If there's a particular strike that you're looking at in the options chain, you know, you could use that as your risk level, right? But you want to make sure that it's defined, and that you stick to it, right? Now, if it comes really close to that risk level and then maybe like bounces, that might be an opportunity to average down, right? Because your thesis is still valid. Um, you want to make sure that you're scaling out and that you have some sort of mid-range price target where you're profitable, but maybe not as profitable as you want to be. And that's usually where you would start taking profits over time, right? And scaling the position down. You could also use that opportunity, like if it aggressively hits your midpoint target, you could use that opportunity to average up, right? So, um, let's look at something so we can get like a real world example of this, right? Say you go like long the inverse head and shoulders on meta here, right? You have you have strong support at 500. You have a lot of open interest at 510. And then up here at 520, you also have a lot of OI, right? So, you're going long here on the bounce off the bottom, right? And you'd probably try to go long the initial pullback or the secondary pullback, right? And so you're probably going to define your risk somewhere around the low, right? You're either going to put it here at like 496, or you're going to use that 500 strike. So, like, if this goes back below 500, I cut it, right? And you're going to enter here, right? And then, in one day, this hit the midpoint, right? So you'd probably take some profit on the rejection, right? But you haven't hit your risk, so you could leave some runners, and then those runners would realize more profit, right? Because they're going to hit your PT and then continue to move up. Percentage risk of premium versus defined level off an EMA. Which would you feel is better? Well, so if you're swing trading, you're probably not just raw dogging short dated calls, right? You're probably either getting a decent amount of theta, like any like multiple day move. You're probably gonna want like 21 to 45 days, depending on how fast of a mover the underlying is, how much open interest there is, you know, uh, what you're looking at for like momentum, right? And so if you're buying theta out here, and say you enter here, right? Or even if you enter here, like this pullback isn't really gonna do, like if you've got 45 DTE, a $3 pullback is not gonna fucking break the bank, right? You're gonna maybe have like a 5% drawdown. So I think in a situation like this, where if you have your risk here, I would still cut rather than use a percentage of total premium. If you're shorter dated, then yeah, your percent loss is gonna ramp up really fast. But if you have like debit spreads, right? Like say you entered like a 500, 520 debit spread with like 30 DTE, this kind of drawdown's not going to do anything. Right? This is barely going to affect the price of your contracts. Um, but yeah, and so then you really want like a firm technical, like risk level. Can we talk about the straddle strategy? I know it's simple in terms of identifying when to close or leg out. My only two questions are how to identify weeks it may be good or bad, and when to open on a Friday for next week or Monday to save the weekend theta. I mean, I would say that if you don't have a lot of capital, you should probably avoid weekends. Very frequently, weekends are flat anyway. They tend to suck, and usually it isn't until like 10 a.m. Monday that you start to see any move at all, right? Yeah, this is the effect of the positioning kind of reshuffling after the Friday expirations, right? IV will generally spike a little bit, which still makes them slightly advantageous because you have a ton of Vega exposure, right? You're at the money. But yeah, they're really not my favorite. If especially if I was managing, a smaller account, I would probably be focused on like Monday through Thursday. And when dealing with these, I mean, the reason I've done them for so long is because they're almost always advantageous. So every day on the zero DTEs, what you have is you have people selling the short strangle, right, and short straddles. And what this does is it makes the long strangles and the long straddles mispriced. So relative to the actual realized volatility, these are cheap, right? And so, frequently outside of these brief bursts of upside price improvement, like we had this week, and even on these, you make plenty of money. Um, but outside of these, the market has tended to trade kind of like this, right? So during this period, say every night, you're entering like we're closing around 54.75, right? There's almost no realized variance day over day, right? The closing price is almost always the same as the opening price. But on and during the intraday on every one of those days, you have a lot of range, right? As those short strangles and short straddles break apart. And so what you're doing is you're taking advantage of the opportunity when one side or the other of the straddle is priced higher than you paid for it. And then when that happens, it immediately gets sold, right? So when we open up, the calls get sold till we're down. When we open down, the puts get sold till we're up. Does that make sense? And so the zero DTEs, and the short vol positioning, um, put that straddle in a range where the price of it's almost always cheaper than the realized move. Now, if volatility were to pick up, that would no longer be true, right? And I would start to break the legs apart and target strangles, right? Because then your intraday moves, not only are they going to trend, right, but they're going to be greater. So instead of being like 0.6, 0.7, as volatility goes up, so does that expected move, right? And so you can get up to like 1.0, 1.5, 2.0, right? And if your intraday realize, like, if your expected move is 2.0, you're not going to want to straddle that because it's going to be very, very expensive. And, the likelihood of mean reverting back during the intraday is lower, right? And you guys, I'm sure, all aware of like the V, right? That we've seen like every day for the last 6 months, but it's been going on longer than that, right? It's really been going on since like end of 2022. And so like that V, that's usually because we open up, right? And calls are overpriced. And so those calls get sold, which drives price down. And then puts become overpriced. And then puts get sold, which drives price up. And then we just end up fucking flat, right? Or vice versa. We open down, right? We open down, puts get sold, push us up, then calls get sold, and that pushes us back to even, right? And so, if you're straddled in the middle of this long, you can sell at each end and then re-enter on the mean reversion. Is Bitcoin going to 7K now? Sure, why not? It's fucking worthless. It could go to 0. It has no value. So, I mean, trying to assign a value to it's ridiculous. It's such a good strategy, even if you only make 10 to 20% a week. That compounds so quickly. That compounds super, super fast. Yeah. It's been great for going on 2 years now. I don't have any complaints. And I've done it. I mean, with the exception of a couple days where we closed with like VIX, higher, and I think it's only been a couple days that we've closed with VIX above 16. And those nights I entered straddles and the market reversed, and we had like fucking 200 basis point moves the next day. So I didn't give a shit about the puts that died. If you make 100% of their premium on any side, right, you've already won, right? And we can look at what that looks like, right? Hold on, let me pull that up on here, right? So here, go SPX, no, not SPXL, SPX, right? And say you entered the weekend straddle, right? And then I'm gonna take some things into consideration here, right? IV has been rising. So, as we move up, we have a strong uptrend. So I'm probably gonna like, buy the call shorter dated, right? That's probably, well, actually I can just do the one I did, which was 155.60 is where I entered. And then I opened this for Wednesday, and then I bought the puts. And this is AM expiry. Yeah, I've been buying the OPEX put. Right. So this is the position, right? But if you go here and look, right, and we say we keep going up tomorrow, right? My total debit on the put is $34, right? So if, you know, we move up 0.8% overnight, so if you get like a big move, right? Hold on. So like right here. So if you move up to 55.94, well actually no, I need to pick up 3,400. What was it? 34.15. So like right there. Like 56.09, right? I don't care about the puts anymore, right? Anything beyond that point, the puts are paid for. They can just sit there for the next 19 days. I don't care if they expire worthless or not. But generally what you get here is you'll get like, you know, like a 20, 30 basis point move, right? Which, you know, that's going to put your call like right around here, right? Like 45% gain, right? Then you close your call out at like 55.85, for example, right? And so, you know, contract value, you're looking at 27.46. So to close, right? And then you've still got an unrealized loss on your puts, but you're looking for like that same return on the put side, right? So you exclude this, include the put, right? And you get that 0.3 move to the downside, right? And the retest at 55.50. You close the put at like 38.74. Right, and then include both. Yeah. Did I do that wrong? Oh, because it changed the cost basis. Or did I not sell to close this? Oh, son of a bitch. I just changed the price of it. I did that wrong. Refresh. And then we close it. What did I say? We close this at 0.3, 38.74. Oh, no. Right. And so that's your, you know, you're gaining 26% on the whole position, and you're closing, you know, at 0.3 and 0.3 from spot. How do you identify weeks and days of the week just in general? I use a calendar. Is today Wednesday or June? It's neither. Try to save a Vega position on SPY. I have October 18, 500p. Okay, that's not a Vega position. Down 20%. Would it be better to average down if we stay at all-time high before 90 DTE roll out, or is December, or is 20% too much of a loss? Should cut and wait. I mean, I don't think the problem here is with the, the position's just bad, super awful. um, you know, when you're buying Vega puts, you're trying to buy something that's going to benefit from a move in implied volatility, right? Because it has high Vega exposure. So if you're buying like the October, right? And you buy the 500, which is insanely far out of the money. Oh, sorry, but assume the AM expiry. No. Are you sure it's a 500? I don't think that expiry. I don't think that strikes on the chain. But these are $5, right? I mean, they have 0.0065 Vega, and I don't think the Vega goes up on them unless. Yeah, I mean, we need to get under, like, under 30. Well, we have to get under 5,000 before the Vega would even move up to 0.1, right? So currently the multiple on implied volatility is less than 1. When you get these, you really want something like, you want it out of the money, but you don't want it so far out of the money that it has no Vega. The whole point is to get exposure to Vega, right? So if you get something like a 5,000, right? See, now your Vega exposure ramps up at the money. See, so like, if we're looking at this into expiry, and Vega will go down as time passes, right? But that's Veda. If say we look out to like August OPEX, right? And this is where you want to see a mean reversion and volatility before, right? And we're looking at our distribution. Your chance of profit's like 3%. But as implied volatility goes up, your Vega at the money, where we're sitting, also goes up, right? And then if you start falling, your Vega goes up even more rapidly. And so your chance of profitability starts to move up significantly. Right. And if we look at this on, the contract value, right, as IV moves up on the contracts, the value of the contract increases, right? So if you're presuming like a 4% move in implied volatility over however many days, right? Say 4% move in implied vol and a 3% drop in price, you're looking at like 152% return. Oh, well, let's say you're looking out at August, right? You're looking at a 57% return on your contract. NVIDIA straddles suck post split. He's on Spy. Okay. So Spy, yeah, okay, you're gonna have more Vega on the contract. So there's Spy October 18, 500. That's not as bad. That's like 0.5. But you still want to look at like what is mean reversion? Mean reversion on VIX is gonna be like a return to 16, right? And that's gonna be your 30-day implied forward volatility. And then you want to look at historic volatility on the strike as well. Um, but yeah, I mean, okay, so say you're looking at a 3% move again, same price time period, right? Right now you've got a 20% loss, so this is a little bit off. I don't know your pricing, but you know, you still want to be looking at the same thing, right? You want that Vega, and this is better. Sorry I gave you shit. I didn't know you were on SPY. So this is a little bit better, right? Where, you know, your break even on a move in implied volatility is above spot. Right, this is a pretty easy way of looking at it. Right, so if you get that bump in implied volatility, the value of your contract is going to increase. And then also, don't forget that, you know, as it gets closer to the money, you know, the delta on the contract is also going to go up. So this is, you know, the value, what you're looking at is you want that value of the contract to go up with a move in implied volatility, which puts you long vol, right? And so, you know, the idea, the whole reason for this is because VIX options are mispriced. And you can go with VIX futures, obviously, or options on VIX futures, and those are going to be priced a lot better. But going long vol here is arguably cheaper than all the other options, and that's why I do it. But for me, you know, I'm just looking. I'm really, you know, I might have like 200 of this contract, right? Um, and you know, I'm looking to get, you know, that like there we go. So I'm looking to get like that there it is. Like that, like, well, I guess in this contract's case, like that 27% return, right? And that's, you know, hedging my long positions on other equities, right? And so when I get that, you know, whatever my target is, depending on the contract, depending on the entry price, when I hit that target, I'm closing like the vast majority of the positioning, right? I'm taking profits. And say, you know, I have like 200 contracts, I'm probably going to sell over 50% of those. And then, you know, I'll assess market conditions, right? That's the hedge printed though. No, the yellow, yeah, the yellow circles are off. Fuck, I can't fix that. Um, just like here under August. God, that's really way off, isn't it? Here, go down that column, right, to the 3% move, which is down at the bottom there, where those two meet. That's where I'm looking for. That's where I'm looking to exit, right? That's my target. Is like, and if it happens before then, I make more money. Also, if it happens before then, I'm less likely to cut all of it, right? Anyway, yeah, I see that. Somebody else mentioned that you had SPY. I thought you were talking about SPX. Give me the ticker when you guys give me your positions, because otherwise I'm going to make assumptions. Sorry about that. Anyway, yeah, I covered what that would mean on SPY as well. Notice me? What is it? Gilgamesh. Oh, okay. Yeah, I got it. Yeah, someone knocked, but I think it's just a delivery. I'll go check. Give me a second. All right. Let me see what the cat and Dork are up to, because it's time to join them. Hello. I'm just gonna keep Dork muted until he's done talking about his butthole.
Hey, Gert.
What's up, man?
How you doing, bud?
Doing all right.
Right on. Happy
JFresh,
Sunday.
Twitter wouldn't let me tag JFresh earlier.
I think I'm shadow banned.
I think he's shadow banned.
Oh, man. Rough.
Wait, did you get tagged when I just copy and pasted? So what I did was I just copy and pasted your name. Did that tag you or just?
Yeah, it worked.
Oh, it worked?
Yeah,
Okay.
it worked.
That's weird. Yeah, it wouldn't let me like quick search you though.
Yeah, I probably lost my quick search for a while because I got banned for 12 hours for something. I couldn't even look at the post. It was claiming that I was in violation of. I think it was like back in June. I don't know. I just blocked the guy who flagged it.
Was it a penis?
No, I don't think so.
Interesting.
Those are allowed.
Oh, yeah, I thought so. I thought you were allowed whatever. I don't know what you could possibly say on Twitter that would offend anybody on Twitter.
I don't know.
Okay. It's really easy to offend people, but that Twitter would care about. Because I've seen some of the most vile posts I've ever seen out of humans on Twitter.
Speaking of people who post on Twitter, I finally got around to listening to recordings of this Adrian Dittman dude.
Mm-hmm.
And it's definitely Elon Musk talking about his businesses.
What?
You sure it's
Like
not just
100%.
another South African guy?
I mean, it talks the exact same way, pauses the same way. It's like the pitch is a little higher, so like he might be running it through a very like light noise filter or a very light pitch filter or something.
Mm-hmm.
But it is almost certainly him.
That's awesome.
And apparently he was making claims that the H100s that Tesla paid for,
Mm-hmm.
like of course ahead of time before they received them,
Yeah.
he sent them to XAI, even though like Tesla had paid for them. And he was like explaining why that was a good thing potentially for Tesla.
Oh, Jesus. I hate Elon Musk so much. But he's so good at just pivoting his company into whatever people want it to be and never delivering anything, right?
Yeah.
Like, I mean, if I was long something that wasn't a piece of shit like Tesla, I would definitely want him as the CEO.
Yeah, why not?
I would argue he's even better than Jensen at it.
So far, I mean, give Jensen time. But the problem with Jensen is that he's still constrained by like providing compute power. Like he's still providing something.
Mm-hmm.
And Elon Musk is just selling the same car they designed like what 8 years ago.
Yeah.
So they've literally just provided nothing for almost a decade. Yet here we are.
Here we are. Yeah, I mean, yeah, for someone who has no actual products, I'm always astounded with what Elon is able to promise people, but more so that they're still willing to believe him.
Yeah, that's I think
because I feel like if everyone found out Jensen was a big fat liar tomorrow, Nvidia would lose half its market cap overnight.
Yeah.
But Tesla somehow almost $1 trillion hasn't done anything they've promised to do in the last 7 years.
Yeah. Well, I mean, it did very well for people for a long time. And I do think that NVIDIA is going to have that weird cult following because of the AI factories and exponential acceleration and all those people. I mean, there's enough crazy people out there that they'll keep moonshotting it, buying the dip, and all those things.
Yeah,
Diamond
yeah.
It's a whole new generation of diamond handers were created.
Yep.
Like Tesla's the millennial diamond hand stock, and this is the Zoomer diamond hand stock.
You think it's been long enough? I think they're both just millennial diamond hand stocks.
Yeah, probably. Zoomers are still. They don't
Zoomers all have like 2 jobs and no money.
Yeah, that's true. I saw a fun post on Twitter about how someone had interviewed some boomers about how their spending habits are sustaining various towns and things. And one thing they said was at the end of their little like "I got mine" little spiel, they said, "We're having more fun than our daughter." It's like, I bet you are. So tone deaf.
Oh yeah.
I mean, why would you pay attention or care, right, if it doesn't affect you?
Right. Just your daughter.
Yeah, but I mean, I feel like a lot of parents just write their kids off at 18. I feel like that's really common. They're just like, "Oh, you're 18 now? Good fucking luck."
Right.
Yeah, I think there's probably 2 groups, right? The one that like lets them fail to launch, and the other that just writes them off.
Yeah. But I mean, nowadays it's so hard to launch, right?
Oh yeah. Yeah, I feel bad.
If your parents aren't economically supporting you until the time you're like 25, it'll probably be impossible to like get good footing in a career.
Yeah, I think that's about right.
Because I mean, like when I went to college, everything was half of the price of like it is now, and I barely made it. And I was working like 2 jobs and getting loans.
Oh yeah, you have to get loans.
And nowadays, I just never would have gotten through. I would have just been fucked.
I mean, here's the issue though: is that most of the college degrees that people are getting are worthless.
My degree is worthless. How dare you?
The only person that can say their degree is worthless is themselves. And there's enough people that 10 years after college say, "Why did I get this worthless thing? I don't use it at all. It doesn't help." So in that sense, yeah, like if you're going to get a worthless degree just because you need the piece of paper to get your foot in the door and get in the big boy club or whatever, then yeah, you should be working and getting as few loans as possible and just like trying to skate through this program. But if you're getting like a real degree where you're actually going to go and do things, you want to take the opposite approach. You want to get as many distractions out of the way, like jobs and things as possible, so you can put more attention to getting good at that thing. Yeah. So it's kind of an interesting dilemma. Because I actually often tell students that are struggling, if they have a job, to just get rid of it. A lot of times they can't, unfortunately, but every once in a while there's just somebody that has a job because they feel like they need one, but they don't actually need one financially. And just like, you think about how much better you'd be doing if you had an extra 15 hours a week.
Yeah.
100%.
I mean, overall, I feel like that's going to lead to a significant decline in advanced degrees.
So I think we actually need more advanced degrees.
Oh no, I'm not saying we don't need them. I'm just saying that people won't be able to get them. Yeah.
Well, the advanced degrees at least will. You don't have to take out any more debt. You can actually live off of. You have to live very modestly, but you can live off of the stipend you get to go for those advanced degrees, the ones that are valuable.
Yeah.
But yeah, I do think college as an institution as a whole should shrink dramatically for most people because it's the ROIs just isn't there.
I'd love an advanced degree, but I can't afford one. Yeah, but what? There's no value. I can tell you from experience that, at least in the industry you're in, like you think it'll open up jobs, they're still gonna want the requisite experience, and the guy with more experience is gonna get it whether you have the degree or not. Especially in finance, they don't. They don't. I mean, like when I first started, it was just like if you didn't go to an Ivy, you weren't getting into a firm ever. And it was really if you didn't go to an Ivy and you didn't know somebody, you were never getting into a firm. And now it's like, you know, they're just not recruiting anyone unless they've already got like a master's and experience. Like most quant positions now require like a master's or a PhD in some applied mathematics field and like 3 to 5 years of requisite experience. So you're getting like a $400,000 degree, so you can go work a $70,000 a year intern job for 5 years until somebody moves you up. And the opportunity cost is insane. Like if you're already in the industry, it's better just to get more experience.
Yeah, I think that's right. I mean, usually pedigree is a tiebreaker, right? But you still have to have the experience underneath, and that's kind of true for everything. People will tend to give you a little bit more benefit of the doubt earlier on, but really, what that pedigree is going to help you with most places is tiebreakers for raises and management positions and things. But there are a lot of special degrees. There's a lot of fields where they won't let you in the room unless you have a PhD or unless you are a master's and you've proven that you can handle it.
If you're doing engineering or comp sci, then a degree is worth it. I don't even know about that. I mean, like, how many fucking 10 and 12-year-olds are out there, like, just freebasing Java code in all their free time? I mean,
Yeah,
there's definitely, like,
computer
just little,
science.
little autistic kids out there who are kicking fucking like, full stack engineers' asses before they're out of high school. And they're not even in the market yet, but, like, they're gonna get jobs,
That
Yeah,
was
I
my
think
dad.
computer
and
science.
they're gonna get that probably without any degree.
Yeah, I mean, look at like Bill Gates and all those people, right? They by the time they got to college, they're just like, I already know all this shit. I'm just gonna go do something.
Yeah,
Like I know people like to try to dunk on Bill Gates as a college dropout, but he dropped out because he already learned it all in high school because he had really wealthy and well connected parents and a network that allowed him to get access to these terminals and computers that were fairly difficult to get a hold of at the time. And he just learned it all in high school, and so when he went to college, it's like this is a waste of time.
yeah.
But yeah, I think
There are
with
some
here's
college dropouts that have, the famous like college Harvard dropout, right? Like that have not had the prerequisite education, but their families were just successful enough that they were fine, right? They just got like some idea in their sophomore year, and their family supported it, and they were like, okay, I don't need to go to school anymore.
yeah, I mean a big part of starting your own businesses, like right there's more great ideas out there than there is capital to support them. Um, and so yeah, raising capital is arguably the hardest thing to do regardless of how good your idea is. So if you got rich parents and a rich network, you can take a pretty mediocre solid idea and make a business out of it.
Yep. You can even just steal someone else's idea, a la Bill Gates and, Mark Zuckerberg.
Yeah.
Yeah.
Yep.
Anyway, I got us a bunch of fun charts. If you guys
Man.
noticed, yeah, I just loaded up the channel with fun charts.
You know how I feel.
Why are you posting
DMs
random
I see.
IV calcs, Dorig? Are you just showing those to JFresh?
I
Yeah.
told him to
Yeah.
stop.
He talked me down from the ledge.
All right.
It's irrelevant.
He was going down a rabbit trail and he couldn't turn it off.
That's good though. That's what I like to see.
Yeah. It's good.
I like to.
It's
I
good
like
for
it
a
when
while.
you guys.
It's a nice little exercise, keeps the brain sharp. You know, you do some, do a little algebra, do a little, just doing. It's really just mental math games, and so those are always good to keep him sharp. It's like his daily Wordle.
Yeah, we wouldn't
But
want Dork experiencing, cognitive decline.
But after like an hour, right? Like Wordles are great. They kind of get your brain going a little bit after like 5 minutes. But, after that, you're probably getting a lot of diminished returns. So I wanted to make sure he wasn't going too far.
You're talking to a gamer here.
God. Jesus Christ.
That's the reaction I want.
Why did you have to go there, Dork? They fucked with gamers. I think that's the thing that Supersonic never understood about finance is that they're the gamers. Like you think your 12 hours on League of Legends and Bronze is fucking an accomplishment, but they're all playing, Challenger 24/7.
Yeah,
I don't know what any of that means, but yeah.
There's enough people in the chat that know what I'm saying, including Nuke.
Everybody needs to DRS their NVIDIA shares.
Oh, Jesus. That'll stop the price from falling, right?
Yeah, that'll squeeze the hedgies.
Nice.
You know, it actually would squeeze the hedgies, not in the way that the DRSers would really enjoy.
Probably not. Yeah. Yeah, I feel like if risk became remotely defined on the short side of NVIDIA, the price would collapse.
Oh, NVD came off Reg Show, looks like.
Ooh, that's bearish. That's been on there a while.
Well, NVD was 2x short NVIDIA ETF.
Yeah.
So if it was on Reg Show, it means people are super long.
Yep.
Anyway, yeah. Everything still looks like it's slowly coming undone, but last week, holy cow.
That was nuts. Yeah, I was looking at your leverage chart there, and that was what the fuck?
Yeah. Oh my god! what was interesting?
I could pull that up for everyone, and you can go over.
Yeah, if you want. Sure.
Give me 1 second. I'll be right back.
Okay. Are we still open? Can we talk about my pool ones here?
I think we are. Is that jump on July 3rd?
Which jump?
On OI leverage.
No, that's Friday.
Okay, cool. I just wanted to check.
Yeah, there's not much to say about my pool. We had a bunch of people yesterday, and it held up okay.
You
Talk about pineapple pizza. Yeah, there's a recorder going on in the background. Yeah. Well,
here. Hold on, I can. Give me 1 sec here. Let me see. Can you hear that?
Hear what?
Damn it! Discord denoised my recorder.
You have a recorder?
I do, and I was just blasting it obnoxiously.
All right, I'm back. Did you need me to move the chart?
Oh yeah, go up one chart
Do up one.
to OI delta value.
Yeah.
Yeah, so remember when I said at that bottom there, it was like, well, with the new quarter, if people start jumping in and just blasting this thing upwards, we could see another go. And I feel like last week they kind of did that with single name, like Apple, Tesla, like all the same darlings, right? Meme 7% shot up pretty hard this week. We're now officially over 1/3 of the S&P 500 consists of 7 stocks, which is a lot of fun. That happened over this last week. But what's really interesting is that the value of both puts and calls went up. The delta value. If you go up one more chart again, sorry. So if you look here on the blue, so I guess it's unlabeled. Blue's calls, red is puts, the value, and then black is both added together. If you look at the red just continues to be low, if not slightly decreasing over time.
Mm-hmm.
But now scroll back down to OI delta value, the next one below. So both calls and puts went up in delta value, which tells me that
In the money calls
IV
or
on
out
the
of the money calls
tails.
being bought.
Well, the puts are what's interesting, right? So the put, even though the contract values didn't really go up, their delta values did, which I thought was interesting. Which
that could be theta, right? Like longer dated positioning being entered.
Well, no, because the value of the contract, if it was longer dated, would also go up.
Okay.
I mean, perhaps, but what I'm thinking likely is happening is that IV is getting priced up a little bit on the tails of both sides, and so we're seeing some of that play out primarily in calls as those get priced up. They have to hedge into it. But I do think it was interesting, and you notice like the VIX was quite resistant to getting just completely obliterated last week, even though it was somewhat obliterated. It has been pretty resistant against any further obliteration. So I thought that was interesting, and then that little dichotomy led to this massive increase in OI leverage, which I have no idea what the hell it even means. I need a couple more days of data to see what this spike means and if it's real or not, because that's just kind of the charts.
I noticed something as well, and I thought this was very odd. If we look at like SPX or SPXW, OI on all expirations, right? And this is something I haven't seen in a really long time.
Hold on, let me pull up the beta.
Which is I'm just gonna screenshot it and throw it up on the stream. There we go. Yeah, this is kind of crazy. There's no in the money puts. There's a little bit, but there's like no in the money puts. There's like almost nothing.
Is this SPX or SPXW?
This is SPXW. SPX isn't much different though, right? Like
are you on OI?
Yeah, this is OI. Look at SPX. Look at SPX, right? Here, I'll throw that up too.
Holy cow!
Yeah, right.
Wait.
Here, the one I'm throwing up right now. So this is SPX.
That's wild,
right? So your delta increases. They're not in the money.
Yeah, that's what I'm saying. I think the volatility, if the volatility is being priced up on the tails, then that would explain it. But, holy cow! Yeah, sorry. If you can't tell, I'm still sick from last week when I started getting sick. It's been never ending.
He's got bird flu from his wife.
So no one's gonna make money
Well,
on
no,
the
it's
crash. No. This means that short vol's not selling puts in advance of the price action to the upside, which is I don't think we've seen this since like 2022. Usually the in the money puts are fucking massively sold at every strike alongside the calls. Right, because that's with IV this low. That's where all the premium is. You have to sell the delta.
well. I mean, you look at. I mean, just look at what has happened in the past. Let's just look at last week because last week was crazy. We basically went straight up, right?
Yeah,
But if you look at the broader market, like the S&P components,
dude,
like
RSP went
most of
down.
the
RSP
components,
was down on the week, like a
yeah,
lot.
well, yeah, it's kind of flattish, yeah, but it's been flattish for a long time now, and it's been going down since like May
April.
when we were trading at 5,300. Yeah, April, May. So it's like it was at once trading around 168 back then, and now it's trading at 163.68.
Yeah.
Uh, and if you look, it's literally just like the meme seven, and then like a couple of other AI darlings that are just like demolishing everything and just dragging the entire market up. And if you look at core 1 month, like we mentioned last week that it was ridiculous. It's even worse now. I mean, we're pretty much. I mean, we dipped to about 3.5 on the COR 1 month, which
Yeah,
is insane.
it's the lowest ever. It's lower than it hit
Ever.
like before like 08.
Yeah, and basically what it's saying is the way that it's designed. So when they calculate the correlation, they don't use all 500 stocks in the S&P. They use like
The top 50.
the top 50 or so. And so what they're saying is essentially that um, the top 50 stocks are going to have more volatility than the index itself. So like 10% of the stocks in the index are going to have more volatility than the entire index, which is just crazy.
Yeah. And a lot more too, right? I mean, it's yeah. I have a chart here actually of core 1 month um, off of Bloomberg. Here, hold on. Can I just drag and drop this? Oh no, here I'll just pull it up in Chrome. Boom, boom, boom. 1 second. There we go. This might be a little bit too. Yeah, it's too zoomed in.
Yeah, well, while you're dealing with that, I mean, so if you look at when correlation really started taking a nosedive, which was like it in the second week of June-ish, like the only thing that's gone straight up is the meme seven. Like the rest of the components are just flat. So this is all meme seven. Like people are just piling in to long volatility on those names.
Yeah. But it's happened so fast.
Yeah, it's wild. It's bizarre. Uh,
Oh, I'm sorry. This is worse than the .com bubble. The peak of the .com bubble.
You
does it
know
go
what?
back?
It's because AI is going to save the universe. We've never thought something was going to save the universe before and had it kind of blow up in our faces. That's never happened.
Yeah, but every major financial analyst service like Goldman Sachs, Sequoia Capital, and somebody else, they all just came out very recently. It's just like, hey, so people are spending a bunch of money on AI infrastructure, and nobody's making any money. So everybody's starting to kind of point that out. That like, hey, someone's got to start making some money here. So yeah, I do feel like we have pretty much just about hit the peak. I mean, like I said, I think a week or two ago, we're still kind of at that phase where people are like, well, this didn't do what we wanted it to, failed miserably, and has, our expectations have been let down massively, but we still think it would get better, right? They're still kind of at that point, which is, denial is one of the first steps of grief, right?
Mm-hmm.
So we've started down the grief path. It's officially started. We're at denial, and I think we're probably about halfway through the denial phase, or we're getting pretty close to the next phase. What are
Depression.
all the phases? Bargaining, stages of grief. Let's go through it. Let's talk about the stages of grief that everybody is about to go through in AI.
Anger. Right.
Yeah, the five
Bargaining,
stages.
depression,
Denial. So
acceptance.
we're, yeah.
Use
So we're at
Kubler.
denial.
Use Kubler Ross.
Uh, yeah. So denial, then anger. So we're gonna be getting to anger soon when um, probably people's calls start getting burned.
I
Um,
think this quarter, right, when all of the Mag 7 guided down, and then they're gonna deliver on that downward guidance,
yeah.
and
So
everyone's
then,
gonna
so I
be
think
really sad and angry because they bought assuming that they would all just beat regardless of their downward guidance.
yeah. So then, and then bargaining. I mean, that at that stage, everybody's going to be saying, well, maybe there'll be one more bounce. We'll get a resurgence somewhere. Somebody will figure something out. They'll find something else to do with all these chips. Yada yada yada. Depression will sink in probably much later. I mean, it's not going to be. People aren't going to start getting depressed and full of despair until probably most of these stocks lose like 20 to 30% of their value. Um, and then acceptance, I guess, is I don't even know what that looks like.
Maybe we're in denial, just waiting for one more dip. Oh no. We've completed our grief cycle already. We're well beyond depression.
Yeah, I feel like
We've
we're
accepted a long time. I feel like we accepted a long time ago that this market was completely fucking unhinged. I haven't been
yeah,
like full bear since fucking July of 2023. This shit's just absurd. Like we're just gonna have to wait out whatever happens, right? I mean, yeah,
yeah,
it's not
yeah.
gonna in the long run. It's self destructive, but we're gonna have to see where that ends. Um,
Yeah, it takes a long time to move to turn the ship around.
and speaking of that,
But
oh, go ahead.
I was just say, but we can observe, and if we, observing how the media talks about things and observing how people talk about things on social media, and observing how Wall Street bets, incinerates money, although they kind of just do that all the time.
Yeah, they've done that for
You can
like
kind of get
12 years.
you can kind of start to get a sense of where we are in this cycle, and having all of these big firms who were initially big cheerleaders of AI coming out and saying all these things signals that people are like, all right, we made a lot of money, let's close it out.
Well, Sunday's for bearishness. Gen. But house prices are up. How could you be bearish when house prices, as of June 30th, have improved 5% year over year, and the median asking
I have
price has gone up 6% year over year,
I
and
have
the
some
percent of
anecdata for you.
percent of listings that had price drops has gone up 7%.
I have some anecdata for you. A
Yeah.
house down the street from me went on the market without a pool at record price per square foot for our area.
Uh-huh.
Sold in 4 days.
See, there you go. Yeah, I mean with people believe really strongly that the value of their home is going to increase, right? Everyone seems to think that's buying right now, and that'll be fun because they're probably, I mean, they're in actuality, they're probably buying the peak of the market, right? But that's kind of what defines peaks in markets is you need a bunch of those idiots to come in and buy as much as they feasibly can. Otherwise, there's nothing there to collapse.
Yeah, I think that's kind of how it's playing out, right? I think people are getting a little bit disillusioned with their purchases. It's just really slow because most people are completely insulated from all of the interest rate shenanigans that are occurring. But yeah, the big thing it was really interesting. It looks like Florida might be on the brink, and usually uh, these home price crashes and things start in places like Florida and Arizona and Colorado.
The Florida real
Places where,
estate market's tanking because nobody wants to insure the fucking
yeah,
homes anymore.
nobody wants to insure the homes, but also nobody's like renting these places out. You can no longer buy a property in Florida and profitably rent it out.
Yeah.
And so trying to unload all of these speculative homes. And yeah, that's causing a little bit of chaos right now.
Well, I have some
I,
great
I don't know. I've
news.
seen so many realtors in Florida have all been like, "This shit's getting real."
Yeah, yeah. I've seen a lot of that on like Twitter, where like Florida realtors are just really really upset that
Yeah.
they're
Once every
selling
Florida
houses
realtor
at a
decided they needed to be a news reporter, man on the street, you know that it's probably not great.
probably. Well, in great news for the American consumer, the rate at which wages improve after switching jobs is now falling in line with the people who just stayed at their jobs. Um, and so broadly, I think we can assume that wages are going down now. Um, and now, I don't know if that necessarily, I mean, that obviously doesn't mean demand for labor is going down. Just a company's willingness to spend more money on that labor is declining, which probably tells us a lot about the economic situation of most job applicants and that they need the money and are willing to take less now, whereas before they didn't need the money and weren't willing to take less.
I feel like this statistic's kind of weird though, because I
It
mean,
is.
the majority of the time, I would say vast majority of the time, someone switches jobs, it's because they're going to make more money, right? So it may mean there's less job switching happening. I think you may be right considering it is returning to what looks like the median. It's kind of a short time frame,
It,
but
yeah,
yeah,
super long. But I mean,
Yeah.
generally these run at about like a 2% spread, which is roughly where it's about now, right? And then, you know, from end of COVID through most of 2023, you know, there was money to be gained by switching careers, like a significant amount, right? The spread moved out to like what, 6, 7, 8% at its widest, right? And now, you know, yeah, it's falling back in line. It's at like 2.7%.
This curve is interesting, though. I
Well,
like the thoughts it provokes.
well, yeah, I mean, on the back half of 2022, there you start to see that, you know, more people are probably re-entering the labor market, right? Which means that
Yeah.
the applicant pool is improving, um, and you know, a lot of companies post right after the pandemic and into the initial phases of it were offering a lot more money to onboard people, because they had a labor shortage, and that's starting to. It's not necessarily that the labor shortage is resolving, but you know, when people's financial situation is a little worse, they could be taking less money, right? Or accepting the lower offer, right? Not demanding more. It could mean some other things too, right? It could mean that, you know, labor demand is going to decline in line with this, except we just haven't seen that yet.
Yeah, I mean, I feel like like we're pointing to like a top in the economic cycle just based on employment data,
Yeah.
but you know,
It's
it's
kind of
going
scary.
to.
Well,
I was gonna say it's kind of scary because the government's still spending, still at a burn rate of like $2.5 trillion a year in deficit spending.
we can look a little
So you can't-
deeper into how people feel about their economic situation by taking a look at this. And this is fixed income funds versus money market funds. And this is the first time since 2008 where money market funds now exceed fixed income funds in amount of allocations. And the last time we saw this was prior to the rate cuts in 2007, that the Fed enacted, end of 2007 into 2008. This is generally very unusual, right? That so many people would be taking 5%, especially with equities where they are. People are still investing, and the rate at which their investment into money market funds has increased is dramatic, and we see that all the way from 2022 to now.
yeah, but at the same time, stocks have gone up so hard that they're still they're still underweight cash.
Oh yeah, I mean they definitely have, you know, here, you'll love this one. If you want everyone on the rug, that they're definitely there. This is AA2 asset allocation per BOA. Right, and we're looking at over 70% of people's investments are in stocks, 15% in cash, and 14.5% in bonds. Although cash investments have been declining, and bonds are picking up, it does look like most of the cash available has just gone straight into equities.
Yeah, I mean, everybody's all in.
Yep.
Yeah, I think we've done a pretty good job of destroying the narrative of the money on the sidelines.
Yeah, yeah. There's no money on the sidelines. Personal savings rate is started to pick up a little bit, but it's still significantly down from where like the long run average prior to COVID, right? So this is savings as a share of after tax income, seasonally adjusted. And that dashed line that you see there is the pre COVID average. You can see where we're at now, and this could really spin one of two ways, right? This could be that people are just feeling really great about their spending habits, or it could mean that people are really suffering and unable to save at any kind of significant rate. And I think both might be true to some degree, but the number of people that are struggling significantly outweighs the number of people that are really happy about their current spending.
Yeah, I mean, like I said, we've been at the top of the economic cycle for a while, but yeah, the willingness of the market to just kind of, it's weird, right? Like what we're seeing in the Mag 7, right? I mean, I'm sure it is concentrated buying by the less educated of us. But even weirder is just, yeah, like you said, the flow into money market funds with these rocketing stock prices tells you where, I guess you would call it smart money is valuing the risk premium, right?
Yeah.
That's just interesting.
Well, the forward earnings yield on S&P is 3.46%, and the 2 year is still at 3.68% forward yield on the S&P, and the 2 years at 4.6%.
Yeesh.
Yeah. Here's home price valuations that we looked at before, but relative to rents and interest rates, this one's fun. I think it's just like, well, as long as they've tracked market-based rent prices, this is the widest spread we've seen between what owners are asking for rent versus what the market is willing to support. And so, the first part of a housing bubble collapsing is that, liquidity picks up in the rental market, right?
Yeah, I think.
Because you're unable to rent at higher prices, and then so people start competing with each other to undercut, and we should start to see. I mean, this could obviously go on a little bit longer, but we should start to see like owners equivalent rent fall more towards where market based rents lie, right? And then as that happens, it kind of starts to cycle out of control. Like everyone's just trying to rent for cheaper and cheaper and cheaper, in order to get a renter, and be able to maintain multiple properties that are mortgaged.
Yeah, another thing that's interesting about this going forward is that lumber futures have fallen off a cliff.
Yeah, home building. I mean, home building is just down. Like, if you've been watching the K Schiller index and the like permitting's been falling out, and this is seasonally. This should be where demand spikes, right? Like late spring into the early part of summer is when home building should pick up the most, and it's trending down across the board. Not only new home sales, right, but construct like permits and new construction are all down. And it's not just the US either, it's globally. Like we see that same decline in England, we see it in Europe. Nobody's building houses anywhere, and the government's not coming in to subsidize it either, because they're all over leveraged too.
Yeah, I
And
mean,
usually, if home building gets that bad, you're right on the brink of the government coming in and supporting it. Right, you're literally on that brink of like subsidized infrastructure spending and housing spending, but we're not getting that, and we probably won't get that given the debt situation internationally.
yeah, I mean, we're at a point where housing is a speculative bubble. It just is,
Yeah,
and the government had no business ever buying MBSs. They should have let the bubble deflate fully in 2008 and let it slowly grow back to some sort of stable, right? But instead, we've got a reinflation of the bubble, and it's going to have to pop again. I mean, yeah, there's people. Some people will argue there's plenty of supply. Some people will argue there's excess supply. Some people will argue that there's not enough supply and we've been underbuilding for forever. But just about to the person for the last 20, 25 years, we've had roughly one shelter per two people in this country. And the prices have oscillated wildly about that, pretty much about that constant. And so now you have declining demographics and an influx of people who would be only at the bottom end of the housing market, not the top end where the people who are dying are living. And you end up with a situation of who's going to buy all of these overpriced houses. Like there's just so many of them. We have so many houses that there's nobody to buy them at these prices that uh, I mean, it's just got to come down. It has to.
so you want to look at something else fun? Here are
Sure.
here's a nice table of the current bank losses, compared to total assets and set one capital. Bank of America is sitting on 2.5 in assets with point one and available for sale and hold to maturity losses. Um, that is so their hold to maturity losses plus available for sale losses are 57.8% of their total set one capital.
That's so crazy.
Charles Schwab is at
Right.
64.4%. Truist is at 46.6%. USAA is at 66.5%. Wells Fargo is at 28.2%. And they
JP
have
Morgan's looking great.
yeah, JP Morgan's kicking ass. So Citibank's not doing too bad either. PNC is doing pretty well. Morgan Stanley's not dying. But
Wait,
if we look,
JPM's going to start charging for checking accounts? If that's true,
yep, they are.
is it
They
just for
announced
poor
that.
people?
Yeah, but like
Okay.
$25 a month for poor people.
Okay.
But if we look
Lord.
at the worst of the worst, right? We can start to see those really nasty regional banks, right? Where, look at Union City Savings, Citizen Street, right? Not huge amounts of assets, but still tied into the system, right? Green Dot out of Utah, sitting at 108.6% hold to maturity loss to their set one capital. First America out of California, 104%. Independence Bank of Kentucky 96.1, right? Like these are pretty bad, but you don't have to go very far down the list to find very big banks like USAA, Charles Schwab sitting on significant losses, right?
Yeah, but the Fed will monetize it all. There's no risk.
Sure. I mean, I'll tell you right now, JPM can't absorb B of A.
The Fed will just not let B of A go under. They'll never have to mark to market, and they're fine.
Well, hmm,
Is this the point where I start talking smack about Alan Greenspan?
Do you really want to? Is it? I feel like it's you're just kicking a dead horse.
I mean, yeah, but man, dude, that guy just fucked everything up.
Yeah, he did.
It was like, guys, we can have the Fed buy stuff to keep the market from going down. And then everything was fun.
Well, hold on, because we can take a look at the Fed's most current balance sheet statement, right?
Mm-hmm.
From Friday, because we just got that print. Hold on. And they are still sitting on 7.22 trillion. Which is only a 0.01 decline from the prior month.
Oh my gosh.
Yeah. Oh, I'm sorry. 7.23 million billion. So it's no, that's trillion, right? No.
I'm assuming it's trillion.
Hold on one second. I'm trying to figure this
Let me take a look.
chart out.
Can you guys not multiply and divide by 1,000? Is that what I'm
No.
hearing?
It's not possible. That's not. You need a computer to do that.
I asked ChatGPT to do it, and it gave me a picture of a man with sunglasses on.
Oh, yeah. It looks like it dropped about 10 billy.
Yeah. Yeah. Okay. I need to pull up the Fred chart on this. This doesn't have a y-axis. It's like Dork made this.
You know, I am a y-axis. Keeps the readers guessing.
How the fuck am I supposed to know what dollar amount it's denominated in?
Yeah, it hasn't really been going down
No.
uniformly. And
right,
actually,
and it was. So it's almost like the Fed has completely stopped quantitative tightening entirely.
Haven't even gotten back down to the end of the first COVID bump. Pathetic.
Well, here, look at the rate of change since May, right? When we bounced. This is fun. You can see just how much liquidity the Fed is trying to provide those money market funds, which is wildly dangerous. But hold on, let me take a screenshot of this because I want everyone to see this. This is pretty interesting. So right around the time Yellen introduced her buybacks, right? We see the Fed balance sheet. It's still declining, but at a significantly slower rate, right? And trending back
Mr.
to
Poopy
positive.
Pants.
What did Poopy Pants say?
Calling me out for saying the Fed will save all the banks, while also saying that TLT is going to 85. TLT is going to 85, whether you like it or not. Get used to it.
What is this?
The
This
only
is
thing,
the United States Central Bank balance sheet. Rate of change, month over month.
gross. Looks like noise.
If you make it, well,
noise, yeah.
If you, well, it's because they do reductions on a schedule that's not the same as the release schedule of their balance sheet. But if you do the notional change and you switch it to bars, it'll look less noisy.
Hold on. How do I fucking? Oh, there we go.
It'll look a lot different when you look at it.
Yeah, that's better.
Yeah. Yeah, and this does go to Girk's point. They may do more of a runoff towards the end of the year, but if they do, that's stupid, right? Like that's just coming into an election year, blah blah blah. The political reasons would, encourage them not to do something like that.
Well, the fact that we've had any months with a positive add to the Fed balance sheet during quantitative tightening is ridiculous anyway.
Right. Yeah.
Yeah.
Yeah, for sure.
And the fact that we're having multiple months trending lower and lower reductions, or multiple weeks trending lower and lower reductions since May, is really a bad look.
Yeah.
Okay, Mr. Poopy Pants, yes, I can have both because the only thing that matters long term is that our government is spending 7% of GDP every year in deficits. So even if the federal government comes in and monetizes all of that debt, you're still going to have inflation running so hot that nobody's going to want to buy a 10-year for less than 6%.
Yeah, you got to pick one. It's either inflation at 7% or growth at 7%.
Either way, it's 7%. And if
Yeah.
you're buying a bond, 10-year bond that guarantees 6%, you lose.
So if growth at 2, inflation at 5.
You know, I have a chart for that, guys.
Yeah, we know you do.
Here, let me. This is JFresh's favorite chart, actually. I think I think I have y-axis on this, but the y-axis is irrelevant. I mean, it's kind of relevant, but not really. You know, this is me watching watching the bear bull steepener, you know, relative to inflation. So this is what you guys are talking about when you say that.
Say steepener one more time.
Just one. All right,
I'm
I'll
going to mute
follow the
myself
instructions.
now. I'll be back in 5 minutes.
This is so awkward. You can't kill Dork. I still need him.
He's been sitting outside my sliding glass door in my backyard for the past hour, just waiting to kill me. So this will be the day. But you know, what we're looking at here is the yield to maturity of all these different treasuries. You can see the short end is like the flatter line towards the top, and then you have your like longer end, you know, bills instead of notes on the bottom. And what you're looking at is the spread between the yield to maturity and the growth. I guess you'd call it the inflation to maturity, assuming constant inflation of asset prices, which is the red line on top. So what you're really looking at is sort of the incentive to, in essence, stuff your money under your mattress, you know, or a better way to put it is like buy shit, right?
Yeah.
Buy because it's a basket of goods, right? And how that the value of that basket of goods is going to increase over time. So you'd want to buy those baskets of goods and sell them at a later date, and rather do that than go and buy all these treasuries.
Yeah.
So yeah.
Also, Mr. Poopy Pants, I would argue, so you can't have the bank bailed out with that as well, though. I would argue that not bailing the banks out is actually the only reason that the yields aren't higher now.
Yeah.
Yep.
Because the banks would blow up if they were higher.
Here's the problem, Poopy. You can't. The Fed can't do both. They can't bail out the banks and keep rates low.
I mean, they can, but what they'll do is they'll cause a shit ton more inflation.
I mean, well, not only that, but the U.S. debt will downgrade.
Yeah.
I mean, just unequivocally, there would be no position defendable. That's why the Fed. I mean, the Fed. Here's how trapped the Fed is, and how fucking useless they are. They can't even cut rates. It's not that they don't want to. They're all dovish as fuck and morons, right? They're still looking at but they can't. They cannot cut rates. They've trapped themselves in a cage built of their own ineptitude. So they could say all the dovish shit they want, right? And they're trying to. They keep saying dovish shit, but then they keep what do they keep doing? Not cutting rates.
Kirk, it went from a hawkish pause to a dovish pause, okay? God.
It's fucking, but it's just a pause. They can't do shit.
Yeah, Mr. Little Pickle. Yeah, we got
If they
Europe
cut
doing
if they cut
hawkish
rates,
easing.
here's the only path to cutting rates. Japan has to raise them. If Japan
Yeah,
doesn't raise, like, it's just a stalemate. If Japan doesn't raise rates, the US can't cut rates.
yeah, you kind of have to rip the Band-Aid off at that point.
Yeah. And if the US cuts rates before Japan raises rates, everything's going to crash. And not just equities, all the markets.
Yeah, because you won't be able to cut rates enough is the thing. Like, you have to cut rates so much. Even if Japan raises rates, like if they don't do a significant amount.
Yeah, if they do like a quarter bip, it's not going to do shit.
Yeah, and we can't cut into that because, what you're saying is straight back to ZERP is the only option if you cut at that point. If you want to try to just rip the Band-Aid off the fucking inverted yield curve, yeah, you'd have to just instantly invert that spread, which would cause a lot of chaos, but it would be done quicker. But but the thing is if Japan is only at 0.5 or something or 1%, that kind of gives you an upper mark that you'd have to reach with your cuts before you would actually start seeing the yield curve fully de-inverting.
When does Japan run out of funds for intervention? They're still sitting on like 250 or 280 billion in reserves at for the Ministry of Finance to intervene. But they're not going to, right? Like what happened last time. They dumped like 70 billion into the fucking FX markets and it just got gobbled up in like 3 days.
Yeah, this is the thing that's so infuriating about the game that the Fed is playing is that in Japan is that everybody's calling all of their bluffs and just piling in on leverage anyway. And like the more they allow everybody to just lever, the worse it gets when they finally have to resolve things. And that's the frustrating part. Like if everything just like went obnoxiously sideways and people weren't just levering to the tits, fine. Like wait it out, whatever, right? But that's just not what people are doing. This is every single time they hear something dovish or something weak, they just lever even harder. It's just like more leverage, more leverage, more leverage.
They don't have a choice. Look at their fucking assets. What the fuck else are they gonna do?
Yeah, this is sort of, I mean, when you think about, and we're not in a recession, right? But to draw an analog to a recession, when returns become more scarce, risk-taking behavior increases.
Do you know what JPOW could do? He does have one out. No,
selling everything.
He could
play guitar at the next FOMC.
He could just raise rates to like 12% until January before he gets kicked out. That would actually make him a Chad and give him a legacy.
Yeah,
I think he's 12 to like 8.
No,
I think he's kind of.
I think he needs to. I think he needs
legacy ship sail.
Actually, 14 would be better.
I mean, a 1% spread between GDP growth and the Fed funds rate, I think, is appropriate. But I mean, if you wanted to fucking do the NBA smackdown on the fucking basketball, yeah, you'd go, yeah, just raise it to the moon.
That's the only way to keep the dollar stable. And Poopy Pants caught himself here, but he said, in that event, bonds will catch a bid quicker than equities. I mean, sure, yeah, people will buy into like the yields going up on bonds, right? But if the dollar is just going straight fucking down, that yield's gonna keep going up.
Yeah.
Garrick, this is the soft landing $1 trillion coin. It's not enough money. They're gonna have to print like 3. They're gonna have to print 3 of those fuckers.
Well, all good things come in 3s.
Yeah, it's a pretty crazy situation. I mean, it is turning into a monetary sort of crisis.
It's already a monetary crisis. I mean, look at what's going on in EU and the euro dollar, right? if we start getting the euro coming in, like if euro falls under a 1-to-1 exchange rate, that's going to be a crisis all of its own, right?
And plus, when you look at oil futures,
And
right?
it doesn't
Oil
look like
futures.
Macron's doing well in France. Macron.
Mr. Poopy Pants, higher than what actual inflation is. So here's why I think that this is wrong, and the reason why I think the Fed has just significantly undercounted what the natural rate is right now. Because if you think about it, they want the rate to be high enough to be restrictive to economic activity, right? So and traditionally you would say, okay, it's going to be, GDP plus, GDP plus excuse me, plus interest. And if you do that metric, then yes, they're high. They're at, if not slightly higher than that, and so they should be restrictive. But that number just clearly we're not restrictive, right? So what's going on? Well, let's go back to the government is spending 7% of NGDP, and they don't give a shit about what the interest rate is. And so the economy is getting 7% of its GDP pumped into it every year, regardless of what the Fed's set rate is, right? And so that's why they're so confused, because they're discounting that.
Here's a chart that Dork will love. If you think we're just crazy bears, and I understand that. We've been bearish a long time. But we're not the only ones. Dork, you're going to love this one.
Give it to me, Daddy.
There you go. The spread between the weakest and strongest investment grade credits bottomed 2 months ago. So the credit market agrees with us.
Yeah, I have my Bama Lama Ding Dong charts if you want to see those.
Yeah, you
They
can
kind of
pull
show
them
the same thing.
Yeah.
Yeah, here, get these going. The dates don't mean anything. Don't get all tinfoily on me.
All right.
All
But
right.
they totally mean something, right?
Totally, bro. Yeah. So you have the red chart, which is the high yield AAA spread, and then you have the green chart, which is the triple B AAA spread, and they both kind of bottomed at the end of June. So, or at the beginning of June, whatever the fuck it was. They did have like a little bottom thing going on. High yield bottomed in late March, and then triple B bottomed in mid-May. Now they're both kind of scooting up. I mean, it's, clearly not like an insane move relative to insane times, but it is interesting to see, right? Especially at a point when people are trying to price in more and more rate cuts, yet these spreads are going up. It is interesting, and I did notice this happening. I've been just like kind of in a wait and see mode with this to see how it develops. But yeah, this is definitely it's an interesting development. I mean, you have to wait and see where the top ends up forming, and also what markets do in response to these spreads continuing to go up, if that ends up being what happens. Very interesting stuff.
Yeah. Did you see that Citibank's pricing in 8 rate cuts for next year?
I did see that.
That was a Citibank?
Yeah.
They're calling for a recession, dude.
Yeah.
They're calling for a
I saw
crash,
that.
right?
Yeah.
8 consecutive rate cuts. They're just saying, please, please, please come save us.
Yeah. That's crazy.
Right after that one bear from JP Morgan got fired, he was almost there.
Mike Wilson, rest in peace.
No, it was somebody else.
Is there a portion of your bear thesis where you can see an equity melt up on Dixie falling, though? I mean, I think we're already seeing that on Dixie flat? I mean, there's no room for Dixie to drop, right? The fucking carry trades leveraged to the tits.
Yeah, why would Dixie drop?
Yeah, I
It
mean,
was silly.
fucking look at this actual nonsense. And if that's not like an impressive enough, like look at this shit. This is December of 2021. Leverage is like 9x since then.
Kalanovic, that's right. That was the JPM guy that got axed for being bearish.
Yeah.
I'm glad Girk doesn't fire me for being bearish.
I've thought about it.
Whoa! Shots fired across the main bow.
You make me too bearish. That's the problem.
It's true.
Well,
this market is not for the knowledgeable. You're supposed to just yellow.
Yeah.
I mean, I kind of did mention that something like this might happen a while back.
Yeah, we've talked about this forever. But you've also called the melt up like 9 times and it keeps melting up.
Well, I remember back in, I think it was Jan 2023, where I said, beware the face melter. And I mean, I didn't realize it would go all the way through, at the very least, mid-2024. It's absolutely nuts. But I mean, I saw something like this coming. Just, I didn't realize AI was going to be like, hailed as the savior of the universe. So that was my biggest mistake. But
I mean, AI didn't even exist until that NVIDIA earnings we shorted, right?
Exactly. Yeah.
Like it was just nobody gave a flying fuck about it.
Exactly. Yeah. But I was like, I see on the horizon a way for, or just, when everything looks like shit in terms of equity risk premium, and just companies look like garbage and they're not really, making meaningful revenues outside of the giant circle jerk that they have going. I saw that the market is likely to be pumped. I didn't realize it would go up a bajillion%.
Yeah,
I would just like to point out that AI still doesn't exist.
Nope.
Yeah. You said nobody knew AI existed yet. It still doesn't exist. Just want to make that clear.
Although they didn't know what the 2 letters were a contraction for, and now they do.
Yeah.
That's true.
So, especially all the MBAs that you hear talking about how AI is all this stuff and it can do all these things. I love MBAs telling me what technology can do.
Nothing has been better for middle management and consultants than AI.
Yeah. Nothing's been better for Reddit commenters on the Pickle Financial subreddit. I've never seen so many hot, terrible takes on option strategies in my life, and it's really obvious that all of the people on there are just copy and pasting like chat GPT responses.
Oh my god, stop and shitifying the internet.
Yeah. They're so bad.
I mean, nothing makes me happier than being told how capable a technology is by a person who needs IT to come help them print out a document.
Oh my gosh, man. That's the thing. It's like something that really has always irked me. It's like whenever you go to a party or whenever there's a speaker nearby, all of a sudden everybody's a DJ and they have all these songs that you have to listen to, and everybody has the best playlist of all time, and you have to listen to it. And it's just annoying because almost nobody does. And I just and my response to that is I'll just roll my eyes and say everybody's a DJ. Well, now it's like the same thing with AI. Literally everybody has a really strong opinion about AI, and they all feel like it's valuable and needs to be shared.
Don't forget dangerous.
Yeah. And let me just tell you now, your opinion about AI is probably wrong. Probably the same opinion that 100 million other people already got from, the cover of Times Magazine or whatever. And it's worthless. Just let it go.
I think
You don't know shit about AI.
ask yourself this: when is the herd ever been correct?
From October of 2023 until today.
All right, fair enough. I meant in the long run, but yeah, you got me.
Oh, yeah. I mean, you know the answer.
Also, if you guys are one of the people giving people options advice on our Pickle Financial that you've pulled from Chat GPT, stop it. You sound like idiots.
Yeah, you're just making the internet worse because Google Gemini scrapes Reddit. And so now we're all, whenever somebody asks a question about options, your stupid answer that you pulled from ChatGPT is going to be the first result on Google.com.
I actually love this, but purely for money reasons.
About having a bunch of uneducated investors making terrible decisions.
Yes.
Well, yeah, that's what makes the financial world go round.
It makes my straddles print.
Yeah, exactly. Buy my options when I don't want them anymore.
All right, so how does
a better moat?
How does short vol, long single stocks, vol? How does that unwind? Is that going to unwind gently? Is that going to unwind imminently and quickly?
I mean, a position like that doesn't unwind gently ever, right? I mean, even the little bit of unwinding we saw in April and the little bit of unwinding we saw like July through October of last year, those weren't gentle.
I mean, think about the performance metrics that it's producing. I mean, that's the thing is if you're doing this and you're yielding a crap ton, I mean, you can't stop now because if you do, your performance is going to tank. It's just going to flatline, or it's just going to go up with equities.
You've already locked in 2 quarters, 3 quarters, 3 concurrent quarters of astounding returns, right?
Yeah, but the thing is those have to continue. Otherwise, investors are going to get spooked. So you can't unwind it. Like at this point, the genie's out of the bottle. You really just have to keep going.
So it just has to mechanically break. I mean, I kind of agree with that.
That's exactly what I mean. I mean, it's just it's the pressure we put on the financial industry to not only generate returns, but generate increasing rates of returns, right? If rate of return should never go down, it should only go up. And that's the goal for everybody. So, and if you don't have a viable strategy to transition to, then yeah, the only option is for it to just blow up in their faces. And you kind of can't get out of the way of that. Unless you just unwind immediately and become the first one out.
Yeah.
And even
even at this point, even if a catalyst were to come along, right? It would still just be a mechanical failure.
Yeah.
Right. Like the catalyst would only be responsible for initiating the mechanical failures.
Yeah, even in the event of a catalyst, you would still see short vol pile in even harder.
Yeah.
They have no choice.
Yeah. I mean, we saw that in July through October, right? Like short vol stayed in despite losing, and now they're double, triple as leveraged as they were back then. Hold on one second.
Yeah, so I'm looking at Apple's been an interesting one because it's so huge, and it's definitely being pumped hard right now. And it looks like, I mean, we still have a pretty good for calls near the money. We have a pretty good mix out to like August, September timeframe. So this, yeah, August, August, September. So, there's one. July OPEX, kind of the biggest one. At 235.
Did you see the OI on SPX at 4,000?
No. SPX or SPXW?
SPX.
4,000.
That's some good shit.
Yeah, also kind of in the September time frame.
Yeah, mostly. It's just like 1.5 million contracts, right?
Yeah, nothing crazy.
Also
Just a little
5,000.
cent long.
Yeah, it looks like
5,000 also has like 1.5 million contracts.
How is Tesla looking? Jesus Christ.
Tootsie Roll
People are
45C, August 16, will print guaranteed. Are you
whoa.
guys
Okay,
playing
let's
options on Tootsie Roll? Who the
well,
fuck
okay.
is
And we're
buying
playing
those?
play on Tootsie Roll too. That's a terrible idea. Tootsie Roll, the way Tootsie Roll works is you buy it under $30 and then you sell it above $30, and that
Yeah,
strategy won't change for at least 30 years.
this fucking Tesla.
Yeah, it looks like
I know Tesla.
people think Tesla's going to 300 by the end of the year. That's what people want.
Yeah, but it ran into Gamma Max Friday and started to fail. Well, it's been above Gamma Max most of last week, and then it started to fail.
Yeah, Gamma Max has started to catch up to it. So now Gamma Max is now all the way at 252.18. Jesus Christ.
But Delta started to fall off a bit on Friday. Friday was a really big expiration. If that Delta doesn't come back, it's going to continue to fall off, I think. I mean, Tesla's actually up right now on delivering fewer cars for cheaper.
Yeah,
there's really not like a bull case there.
But it seems like the thing that's able to carry this market. The interesting thing I saw was with Apple. People were saying, bulls were saying like, "Oh, AI Day was great. They're gonna have a great, refresh cycle. Everybody's gonna want their new AI phones." And that seemed to work, right? People started piling into options on Apple. You've got Tesla's, I don't know, autonomous driving day or robot day. I don't know, in August, beginning of August. So people are kind of pumping that. I don't think anybody cares. Nobody that's going along Tesla cares about their cars. They're all like, "Oh, this is going to change the world. Self-driving is going to be 10 trillion."
I didn't hear it.
None of it came through.
No, it was like you said something self-driving, something.
God damn it! I'm not repeating myself. Sorry, guys.
That's fine. Yeah, Apple also at Gamma Max. Just right at Gamma Max too.
I mean, it's just ridiculous how all of these stocks are just getting repeatedly pumped right to Gamma Max just over and over again.
Yeah.
Like Apple, even back in like the craziness of 2022 and even during like 2023, Apple spent a considerable amount of time well below Gamma Max. And then just like in the last since AI Day, like it's just been straight up just slamming against Gamma Max and bouncing and then going straight up.
Yeah.
Real smart market, guys. It's all good.
It doesn't look like the delta's fallen off.
Nope.
Yeah.
Yeah, so still got a lot of delta on Apple about Microsoft.
Microsoft's been picking up more delta. Microsoft actually closed Friday, I think, above Gamma Max. Although Microsoft's not super influenced by its options chain. This is definitely not the first time I've seen it just blow through Gamma Max. It doesn't care.
I mean, what its delta exposure is at? It looks like
40
maybe
billion.
yeah, which is what percent of its market cap? Like nothing.
Yeah.
Yeah.
Apple's is around 50 billion. I mean, most of like Apple and Microsoft's gains are like active or like, well, passive investment fund flows, right?
Yeah.
So it's just
I mean,
like
Nvidia's
people buying into their 401ks harder is more likely to drive both of those higher than the options chain is.
Yeah.
Thing is, how much longer can they keep pumping it? They don't seem to be stopping anytime soon. Well, I'm very interested in the fact that there's no out of the money puts right now.
Wait, Girk, I need to know how many times have you been asked that?
What?
How much longer
can they keep
up?
pumping it?
Yeah.
I think every day. I think at
It's the
least
newest.
9
Dude,
times a
hedges have
day.
infinite money. Dude,
Yeah,
hedges have infinite money, and if can they short the gimme forever?
that's what it feels like.
I mean, really, like this can be kept up for a fucking long time. I mean, just think about, you know.
I mean, it can't from a mechanical point. It can't be kept up that long, right? Like the leverage is already maxed out. We're gonna hit like mechanical limits in the index.
I think it could be kept up until VIX hits about 10, 9.5. At that point, things start getting really dicey.
They're pretty dicey right now. I mean, yes, we can keep going up, but it's not gonna be as like linear. Like we're gonna go up, we're gonna get rejected hard, we're gonna go out. Like it's gonna become significantly more unstable if we keep pushing up from here.
Yeah, and we're basically at, I mean, you can say VIX could keep going down, but we're basically at VIX limits that haven't really been breached since Volmageddon in 2018.
Yeah. Not to mention there's still only so much you can pack into dispersion and all of that, right? So like your case, Dork, for it to continue to rise at this rate would require breadth to come in. And that seems to be the major failure, right? Is that like the pumpers can't get anybody to pump with them.
Well, I mean, no, just a dispersion.
Well, I mean, who's gonna enter a new dispersion trade here with correlation at 0?
Some new idiot, some dumbass, absolute moron, but they will, because you underestimate the stupidity of the people who are doing this and their appetite for risk.
But they're already like all in.
I mean, but with leverage, there's no such thing as all the way all in until you're fucked.
Something's got to ease. Yeah. I'll put it that way. Like we got some easing this week, and that's largely what allowed the leverage to come back online, right? But if things don't continue to ease, then they're going to end up over leveraged again. The other issue with dropping yields is that we have those new event related SLDs in place from like through FINRA now. So like when moves like above a certain level, they have to make additional supplemental liquidity deposits. that's gonna have some effect too, and that's outside of the fact that we're pushing into like levels where the MM's just gonna start selling shit. And CTAs are like a little bit longer this week, but not much. Like they're still kind of max long. Like they haven't really picked up any significant holdings since we broke like 5400. And so they're just looking like they're just holding, but they're just looking to sell at the first opportunity, right? So like any one sigma move and you're going to get CTAs dumping like $200 billion in assets.
See, the worst part about that, Girk, too, is that we have manipulated, I guess. Manipulated is a strong word. The amount, like the size of a move of one sigma has become so compressed that a one sigma move really isn't that extreme anymore compared to what it's been in the past.
Yeah, well, I mean that's part of the mechanical effect of all this, right? That's why we like watch skew, because as skew gets like insanely high, the chances of like 3+ sigma moves occurring, like the probability just starts skyrocketing.
Like here, let me pull up SPX's historical volatility here and just look at their HV10 so we can see what a one sigma move would be on this. It would be like 2.5% or something like that would be a one sigma move in 10 days.
Yeah, that would fucking
That's
break the
crazy.
back of short vol.
That's insane. Yeah, no, but
Yeah.
that's insane. Like that's just it's ridiculous that, if the market fell like 4% or 5% in 2 trading weeks, that would
It's
be like a
it's
move.
crashing. Yeah.
Yeah, it's literally crashing at that point statistically over
Yeah.
10 days. It's ridiculous.
That's fucking nuts. No one's arguing how nuts this is, right?
I mean, the HV30 is at what, 7.44%? Hold on, let me 0.0744 squared. Or sorry, no, square root. No, yeah, it's about like a 5% move or a 4% move on on SPX over 30 days is a one sigma move. I mean, obviously it'll pick up as that goes as that volatility picks up. HV is going to go up, but like at this very moment in time, that is statistically what the market is expressing, is that any move outside of like 2.5% in 10 days is just is is out of the norm
Yeah.
in 10 days.
Well, I mean, I think the strength of this move and the fact that vol didn't move at all kind of highlights that, right? Because we had a 2% move up over this last week. And that's also a one sigma. That's also a one sigma move, right?
Yep.
Awkward.
Yeah, it's just dumb.
I don't want people getting that bearish just yet. It's not OPEX. I think we can relax a little longer.
Yep.
Yeah.
Speaking of which, I'm calling this OPEX first, by the way.
Ugh.
We're up 7% in 40 days. Yeah, that's perfectly fine, right? There's nothing wrong with these returns. These are just average. The market's just catching up to where it should be.
Yeah, and it's important to remember that all of these earnings or all of these returns are being backed by real earnings, by real
Yeah.
businesses. So
Yeah. Yeah, it's not like the forward earnings yield of the S&P is nosediving quarter over quarter or anything like
The
that.
thing is all these huge companies though, Girk, you forget there's the Fed put and then there's the corporate put. They're buying back their own stock. It's
I'm
great. They're
not
having a great
forgetting the
time.
corporate buybacks, and I honestly think that they've probably like buyback windows have probably already saved us from a crash because the flows are fucking enormous, right?
Yeah, they're pervasive. They're like
Yeah.
they're like the air that we breathe.
And we have bank earnings next week, which means we're getting really close to the next round of buybacks. We've almost stayed alive long enough for insiders to make more money. Buybacks should
Let
be
the good times
illegal,
roll.
like they were. They absolutely should be illegal. And I think for me, the biggest reason that buybacks should be banned is because it should be sufficient in our economy and society for a company to maintain a constant rate of performance and not need to outperform year over year.
Well, I mean, isn't a share buyback nothing more than monopolizing your share price?
Yeah, it is.
That's essentially, I mean, and at that point you're going against free market actions, right? You're setting the bid on your own stock. So you're essentially telling you're enforcing a price on your own stock, when we like
I
to
mean,
assume that our equity markets are free and fairly priced.
from a macro perspective, a buyback is allowing an investor to exit, right?
You could look at it that way, but it grossly overperforms for people with a large shareholding, right? Like the advantage is all towards large shareholders, not towards smaller shareholders.
Yeah, it's not accretive to
Oh,
shareholders.
sure, right, yeah. It gives people liquidity. Don't like large shareholders liquidity, sure,
Yeah.
but it.
Well, it doesn't give large
Um,
holders. It gives them, I guess, liquidity to move out if they wanted to, but if they don't, it reduces liquidity. That's where the dividend, right? It kind of does the same thing, but in a distributive way where people who own shares of the company will receive a dividend and use that dividend to buy more shares. A stock buyback doesn't give them that opportunity.
yeah, but it allows right. That's what I'm saying. It allows you to exit an investment, right? Whereas the dividend is
But that's
a
meaningless to
payout
small
for
shareholders.
owning.
Dividends
That's
are,
absolute.
I mean, yeah, dividends are far more they offer far more equality between investors of scale, of different scales.
Yeah, and
Yeah, well, I mean, you could.
uh,
So, I mean, there's another argument for another day of how much should any one entity own of anything, and how aggregated our wealth should be, or concentrated our wealth should be. But just from the perspective of why do a buyback, it's just to allow investors to cash out, right?
I mean, I don't think the FTC has done their job in like 30 years.
Yeah, I mean,
We should be out
as long
busting
as
up monopolies at a far greater pace than we are, which is
as long as
basically not
Elon
at
Musk
all.
as long as Elon Musk is not in prison, then none of the financial entities have done their jobs. There's no reason why he should be a free man.
well, he's a billionaire.
So CPI month over month, 0.2, year over year, 3.4. Huh. What do we think about CPI this month?
The price of things is too damn high.
Those seasonal adjustments were fucking rough. I think we're expected to see a move back up again. We should, because inflation should still be elevated, and also oil prices were higher last month again after dipping in the prior months, so that'll be a little rough. I know rents and house prices are up, so but like with last month's revision or with last month's seasonal adjustments, everything just got flatlined, right? So it may be that we see a lower rate of increase in inflation over the next like 3 months until we get the next batch of seasonal adjustments in the last quarter of the year. At which point inflation might explode. what was actually crazy is they managed to seasonally adjust so many things that they got rid of the bump. They got rid of the inflationary bump in healthcare costs, which wasn't insignificant. We're just not going to consider that part of, you know, necessary expenditures anymore.
Yeah, I think we're kind of at the point where nobody believes the numbers anymore. Um, yeah, but they're going to keep trying to hold on to their flawed methodology for as long as possible because what else do they have? They don't have
Yeah.
a methodology. They just have chaos, and nobody can admit that we just don't really have a good read on what's going on, because that would cause panic and yada yada. So yeah, I think the numbers will come in roughly in line. There's no reason to think that they'll be hot or cold. If anything, they've shown a propensity to utilize the tools that they have to try to massage the numbers to some extent.
Yeah.
Um, Not necessarily to skew it one up or down, but to try to eliminate noise. And by trying to eliminate noise, they're increasing perceived certainty that isn't really there. So, if anything, these numbers are being massaged to provide a sense of higher certainty than really exists.
Mm-hmm.
So I think that's, if anything, that's what you should expect going into this print. Whatever the number is that would provide people with a high certainty of what's occurring, um, that's probably going to be the number. And I think right now that number is soft landing, golden path. So that's the number I think is going to be printed. Flattish, perfect Goldilocks, low volatility.
Yeah, I think what they're going. I think that the print is going to be exactly what is required for investors to be encouraged to short volatility on SPX and buy more meme 7.
I want this at this point. I want meme 7 to get to 40% at least. Why not?
I'm trying
Let's
to
just really.
pull this up.
Oh,
Oh, there we
man,
go. I got it.
it needs to go to
Yeah.
70%.
So I do think everybody needs to look at this real quick before we get on to like our projections and stuff. This is the CPI index, right? And just in case anybody forgets or thinks like, oh, we fixed inflation, or oh, inflation is going down, just look at the index.
Yeah, no, and this is kind of JFresh's chart. He did it beautifully.
You did. I saw that.
I hope you're updating that, JFresh. But the step down in purchasing power is such an amazing representation of that stair step up and the, you know, just the net change and the cost of a basket of goods.
I am keeping track of it. It just doesn't update that regularly. But yeah, it's still like -7%.
Yeah. So it's and this is when people say that, you know, wage gains and stuff are outpacing inflation and all that, you know,
Nope.
while it may be while it may be true now, it was very far from true just 2 years ago.
When they're saying that, but just remember, when they're saying that, they're taking the month over month. Every time you see that in the news, right? It's misinformation, disinformation. Because every time you see that in the news, what they're doing is they're taking the month over month rate of change in wages, right? Which is like, say that's at 0.4% positive, and comparing that to the month over month rate of change in CPI, right? And they're like, oh, wages are outpacing inflation. But wages don't have a 300% increase head start like CPI does.
Right. So if you just started working today, you'll probably be okay. But if
Yeah,
you
yeah.
have worked for any meaningful amount of time, your purchasing power and net went down.
Let me ask everyone this. Have any of your bosses tripled your salary this year? No? I'll give it a second.
I can also provide
Crickets.
another way of looking at it too. When you talk about, year over year inflation as well, right? You're talking about one thing when the thing that everybody is, upset about is this thing. Here's a very simple graphic to describe kind of why people are still butthurt about prices, right? The white line is year over year inflation roughly. The red line is what everybody's upset about, and that's what economists can't seem to comprehend.
Hold on. I'm gonna pull it up for everyone.
It's a decent way to, and this kind of
Yeah,
summarizes
it
like
does.
this is why people are upset. It's not because things are going up year over year like crazy anymore, but they went up so ridiculously fast for a solid freaking year and some change that every change from here is just another kick in the balls, however small.
But we're not getting small changes, right? Look at CPI from Jan through May.
Are you going to make me do TA on the CPI?
No, I don't want you to do TA because it's disgusting. But I mean, you just look at our like trailing month increases, and like inflation's hot as fuck over the last like 6 months, last 3 months, right? And the Fed won't talk about that. They just talk about the last 12. They're like, oh, it's not so bad over the last 12, but
You told me not to, but I did it.
it's still pretty fucking bad over the last 12 months, and it's significantly higher than anything that they're projecting, right?
You told me not to do it, Gert, but I did the
I know,
TA
you
because it's
son of a
also
bitch.
it illustrates what you were just saying.
Yeah.
It's still going up too fast, and that's what that's an extra bad problem to stack on top because it means wages have to grow like crazy. But from the chart you started off with at the beginning of this discussion, the whole idea of job hopping being able to keep you ahead of inflation is starting to kind of fall apart from where it was back in 2021, 2022. And so if you don't see wages keep up with the inflation, or if they just kind of like if real wage growth goes to 0% for enough time, you're going to start seeing that the pressures build for a deflationary cycle.
There's wage
Yeah, I
growth.
mean, another way to think about it is from 2020 till now, about 4 years or so, we have seen a long run inflation rate of around 4.8% a year. That's what people feel. They're not so tuned in that like, oh, this month everything stopped going up, so everything's great now. They're looking at it over multi-year time spans because that's when their finances year over year, they can really start to think about how are my finances improving each year. There's too much noise and chaos. Nobody's tracking it to that detail. So they just want to feel, this year, do I feel better off than last year? And that hasn't been true for a really long time because our long run inflation rate has been about 4.8% a year.
Yeah. My home will just triple in value in 5 years, obviously. Obviously. Your home will absorb all of the latent inflation for you. It doesn't actually go up in value. It's just a savings account for your inflation. I'm not going to
Well,
back
as you
off
say,
of that. That's the best analysis of the housing industry and housing prices anybody's ever come up with.
let's
All right,
assume that your
guys,
mortgage is paid off.
we got to do predictions. I gotta run here.
All right.
I'm down.
What do we have this week? We have, hold on, let me give us our economic
CPI,
updates.
PPI, Thursday, Friday.
Just Thursday, Friday, right? Nothing before that.
We've
I don't
got
think.
we've
Any?
got some bonds being sold, and then we've got
We got a.
JPAL on
Oh,
Tuesday and Wednesday, and then Yellen
yeah.
on Tuesday afternoon.
We've got back-to-back JPAS speeches Tuesday, Wednesday.
Yeah,
We should be getting the Yellen's testifying, but shouldn't we be getting the new issuance for this quarter?
I don't know.
I feel like that's missing. I'll have to look. Maybe it already came out. Did I miss it? Okay. All right. Yeah. So we got like a 3-year auction Tuesday. We got a 10-year auction on Wednesday. And we've got a 30-year auction on Thursday after CPI. We have a shitload of information coming out of China on Thursday also. And tomorrow, Tuesday night, we have Chinese inflation, and then we're gonna get like balance of trade, and then like their lending stuff, and then next Sunday they're having their big like economic day for China. That'll be important. We have the Michigan consumer preliminaries on Friday also. Those are going to be important. But yeah, I think most of the week's going to boil down to CPI, PPI, end of the week. It's going to be hard to predict this one even remotely with any kind of accuracy.
I think I got a pretty good prediction.
Did realized volatility pick up at all? Or is it still just nothing?
It's still pretty low.
All right. Well, we all lost because we're all like 400 basis points off or more. um. So, who wants to go first?
I can do it.
All right.
All right. Nothing matters. 5,600 by close on Thursday. And then
I'll close
50.
Thursday.
Yeah, and then 55 50 on close on Friday.
Okay.
That's only 2 points, but nothing else matters besides CPI and CPI.
Yeah. JFresh?
All right, let's see. So, we got. Sorry, I'm doing. So Wednesday, we're gonna hit 55.90.
Wednesday close?
Yeah.
Okay. 55.90.
Yeah. Then Thursday, we're gonna see 55.60. Then Friday, we're going to close at 55.70.
Okay. Hold on one second.
You bearish boy.
We're all kind of
He's
around
so
the.
bearish. That's a 2 sigma move.
It is not.
I know. I'm just fucking idiot.
It's only 112.
Yeah, I
Yes.
think the market participants have a lot of them left to keep this to be as boring as possible.
Yep. HV go to 0. VIX to 9.5. Meme 7 to 70% concentration. Let's do it.
Do you really think CPI will provide barely any movement? I don't know.
It's not,
Actually, I mean, like my Friday could really go either way.
if CPI
I chose up because I don't think PPI will surprise. But if CPI were to surprise, yeah, I would probably say like it's gonna go that way. Like you could get another drop at the tail end of the week. But I think CPI is gonna be, I mean, probably in line with expectations. So CPI might even be like a little bit bullish. Ooh, you know what? I like that better. I like just completely mirroring J Fritz's.
looks like a butt plug.
All right, thanks for coming, guys.
All right, guys. Thank you for hopping on. I know you got to get going. I'll see you later. Appreciate
sounds
it as
good.
always. Good talks. Have a good one.
Yep. All right. See ya at Futures Open.
Yep.
Later, guys.
Later. All right, guys. If you have any questions and I wasn't able to get to them on the stream, feel free to hit me up on the Discord. I should be hanging out, working around for the rest of the day. Thanks for tuning in. Later, everyone.
Five, 4, 3, 2, 1, 0. All engine running.